Next is C 8.4.7. A firm has current sales of 2 crore 56 lakh 48,750 rupees. The firm has unutilized capacity in order to boost its sales. It is considering the relaxation of its credit policy. The proposed terms of the credit will be 60 days, credit against the present policy of 45 days. As a result, bad debt will increase from 1.5% to 2% of sales. The firm's sales are expected to increase by 10%. The variable operating costs are 72% of sales. The firm's corporate tax is 35%. And it's required after tax return of 15% on its investment. This will be relevant. This will be important. Should the firm change its credit policy? Let us directly feed in some figures. Let me tell you, this question is somewhat typical, a good question, because a fixed cost is not given. Sir, if fixed cost is not given, then how we will calculate interest on debtors? Because in all the sums previously, we have done it on total cost. Here, we will use the approach on variable cost. We may use even on sales, but it is good to use interest on debtors on cost. Let us directly jump to our Excel sheet and put in some figures for current policy. My sales is 2 crore 56 lakhs 48,700 and 2 crore 56 lakh 48,750. Let me see whether it comes or not. Two crore 56 lakh 48,750. All right. What is variable cost? Variable cost is 72% of sales. So I'll be getting variable cost, which is this is 72%, right? One crore 84 lakh 67,100. There is no fixed cost. We will be finding out interest on debtors. But there is bad debt. As the proposed terms of credit will be 60 days, credit present is 45 days. So present is 45 days. As a result, bad debt will increase from 1.5% to 2%. Currently, it is 1.5%. So in present policy, it is 1.5%, which is 3,84,731. The firm's sales are expected to increase by 10%. The operating cost, all right. The firm's corporate tax rate is 35%. So let me write down this. This is 3,84,731. Let me calculate interest on debtors in current situation, present situation. I am assuming interest on variable cost. So what is variable cost currently? 1 crore 84 lakh 67,100. 1 crore 84 lakh 67,100. What is credit period right now? 45 days divided by 360. We are assuming 360 days a year. Multiplied by. Now this will be relevant. Try to understand. Required rate of return is given a post-tax. If we find out interest based upon this figure, 15%, then there is a problem. Because whatever answer we have got, 71,81,650, this answer is pre-tax and not post-tax. So you cannot deduct something which is a post-tax from pre-tax or something which is pre-tax from post-tax. So what I'll do, try to understand. I'll make it somewhat easy. This is a post-tax. I will make ROR pre-tax. Concentrate how I will make it. If I want to make ROR post tax, how I can do it? ROR pre into 1 minus T. We are having ROR post 15%. I want ROR pre. What is 1 minus T? Tax rate is 35%. So 1 minus T is 65%. So what will be ROR pre? Will be 15% divided by 0.65. 15 divided by 0.65. 23.08. This is my pre-tax required rate of return. I am having all pre-tax figure. I can apply it over here. 23.08%. Let me find it out. In this case, 184,67100 into 45 divided by, let me make it 365, because I think answer will be based upon 365, as 360 is not directly given. You may assume even 360, it does not matter. 184,67100 into 45 divided by 365 multiplied by 0.2308, which is 5,25,477. Let me even put it in our Excel sheet. 5,25,477. This is interest on debtors as far as current situation is concerned. What is my relevant profit? 62,71,442. If in proposed situation it is higher, I will be taking this as a fine. Let us go in proposed situation. In proposed situation, the firm sales is expected to increase by 10%. So, what was it? 256,48750 plus 64875. 256,48750 plus 256,48750. 282,13,625. Eight two one three six two five. Two eight two one three six two five. I think the space is let me type it. 28213,625. Variable cost is coming, contribution I have got. I need to find out interest on debtors. Before that, let me change the figure for bad debt, because bad debt is changing. It is not 1.5%, it is something else. So bad debt is will increase to 2%, right? So bad debt will be 2%, which will be 5,64,272.5. Let us find out interest on debtors in proposed situation. This is a point. Interest on debtors in proposed situation. We are calculating debtors on variable cost. What is variable cost in proposed situation is 2 crore 3 lakh 13,810. What is credit period in proposed days is 60 days. From 45 days, it will increase to 60 days. And what is the required rate of return pre-tax is 23.08%. 2 crore 3 lakh 13,810 multiplied by 60 divided by 365 multiplied by 2308, which is 7,70,700. Which will be interest on debtors in proposed situation. So, if we are increasing our credit period from 45 days to 60 days, the relevant profit from 62,71,442 is increasing to 65,64,843. Please understand once again, this is a relevant profit. This is not the profit which you will see in your profit and loss account if exactly as per forecast the policy works. But understand, this profit is always useful in making decision whether you should increase the credit period or not. Once you have taken the decision, there is no use of this particular profit. Please understand, here we have not even considered fixed cost. So there will not be any fixed cost in the company. There will be fixed cost, but fixed cost is irrelevant cost. If we calculate interest on debtors on variable cost, then fixed cost is irrelevant cost, is not required. Say, let me take, suppose it is 10 lakhs. In both cases, I have taken 10 lakhs. My decision will not change. See, still answer over here is higher. So you will take the decision. After taking the decision, this all calculation is useless. You don't have to see it. This profit is just relevant for decision making. Excellent question in two sense. Number one, this point. What is given? Required rate of return post-tax. Easy. We converted into pre-tax. Number two, the figures are very difficult. So high level of concentration is required. I am having Excel sheet. Still I was making some errors. You will not be having Excel sheet. So you will be having pen, paper and calculator. So high level of concentration is required when the figures are of this type. Huge and lengthy figures.